What's up, everybody? It's Nick Wise here, Wise Enterprise here to give you a quick strategy on the Ichimoku Cloud Breakout strategy. So it's a strategy that I learned from IML, Markets Live. If you're not familiar with it, man, you need to get with it. It's a huge training platform on how to trade Forex from six-figure and seven-figure traders. And this is one of the strategies that I took and running with right now. So Ichimoku is a trend strategy, and Ichimoku is Japanese for one glance. So at one glance, you can look at this chart and know where the trend is going and what's happening. All right, so without further ado, let's just go into the components of the cloud. I'm gonna go ahead and take this off so y'all can see how to put it on yourself. So this is what a chart looks like, bare, naked. All right, naked Forex charts. You go up here to indicators. Just type in Ichimoku, cloud, click it. You're good, all right? So just to give you the components of the cloud, this is the cloud in the back, the red and the green. Green means on the uptrend, red angled down means on the downtrend, all right? And you can see that easily by just looking at the chart. See how it's going down. We're only when price is under this cloud, we're only looking at sells, okay? When price is above this cloud, then we're only looking at buys because that's the trend. We're trading with the trend, all right? So the main components that we need to focus on here are direction of the cloud, over, under, and lagging span, and breakup structure. So what I mean by that is step one, all right? Step one is price breaking the cloud. So let's zoom in over here. Zoom in over here. You want to see the price break the cloud, all right, with momentum. So you see it broke out of the cloud right there. All right, step two is lagging span breaking the cloud, all right? So the lagging span is this purple line, which shows 26 periods in the past, okay? So once this breaks the cloud with momentum, it's just a momentum indicator. It's showing you that, okay, it's a pretty strong trend. It's gonna go down really fast, all right? So it's breaking the cloud right here. All right, now third is break a previous structure, step three. So here's our structure right here, okay? It's where a support line was created where price came and couldn't bounce under it and it went back up, okay? So that's created the structure. And that's where we're gonna take our safest entry point, okay? So let's take this line, put it right here. That's our entry, right here. So let's zoom in on that backwood. We're gonna zoom in. So this line right here is where we're gonna take our entry. Find this little arrow. Let me taking it down, right? All right, that's our entry point. Now let's calculate how many pips we could get just off this entry. Cloud breakout. You want to take it down to here. 2670. So 2,670 pips. All right, in 3 days, which is big time. And this is Bitcoin. Crypto, you get catch a lot of pips in a short amount of time. Okay. Now, that's just one example. Let's go to another example. We'll take this smaller one right here. All right. So you got to break out of the cloud right there. Going down. We have lagging span breaking out of the cloud right here. Purple line. And we have our structure. All right. That's the structure. So step one, step two, step three, all confirmations. Boom, we're taking that trade right here. Let's grab our ruler. See how many picks we could have caught. For the most we could have caught, 1,133 pips in less than a day. All right, I'm going to show you what those pips mean. If you're already trading Forex, you know what it means. Okay, you understand what 1,000 pips can do for you. All right, last one right here. I don't like doing long videos. It's gonna be real quick. So got a price. Step one is what? Price breaking out of the cloud. All right, we got it there. Step two is what? Lagging span breaking out of the cloud, which is we get right here. Step three is break a structure. So we look for a previous structure is right here. So that means you can grab our entry point. Go right here. And as you see, it doesn't cross that breaker structure till right here. All right, so let's set up our, we know it's going down. It's going down. All right, so let's grab this ruler. See how many we could have caught on this Bitcoin downtrend. If you want to take it here, 1,700 pips. If you were able to go all the way down, which you probably weren't, it's 1,800 pips. All right, so 1,700 pips in 4 days. Okay, now, like I said, Bitcoin is volatile, and you can get a lot of pips in a short amount of time. So just to give you an idea, I know all 3 examples that I used were more than 1,000 pips, but I'm just going to use this base number. All right, 1,000 pips. On a 0.01 lot size, you're making $100 on 1,000 pips, okay? Just with 1 cent, all right? With a 10-cent lot size, you're making $1,000 on 1,000 pips, right? So 0.01 equals 10 cents per pip, 0.10 lot equals $1 per pip, and 1.0 lot, which is dollar lot, standard lot size equals $10 per pip, all right? You're leveraging 1 to 100, all right? So on 1,000 pips, you could have made $10,000 on a standard lot, on a $1 lot. Just imagine that. All right, so let's go back one more time for the steps. Okay, step 1, price breaking through the cloud with momentum. All right, step 2, lagging span breaking through the cloud shows the trend momentum. And step 3, break a previous structure gives us the safest entry points. If it doesn't break that structure, that means it's going to reverse and go the other way. All right, just to give you an example, right here. We got price breaking the cloud. Okay, step 1. Step 2, lagging span breaking the cloud. All right, step 3, break of structure, which is right here. Okay, previous high. Now look, we got these confirmations, and we can't take the trade until. Let me get off that. Can't take the trade until here. Right? Until price breaks the structure, you would end the trade here on the way up. But look, price didn't go up to the break of structure to that previous high, and it dropped. All right, so if we would have just entered prematurely without using this step 3 previous break of structure, you would have got it on a buy, and it would have killed you. All right, it would have went down on the sell. So this is using this break of structure as the safest entry point. Now, the last thing I'm going to talk about. See if I can delete all this real quick. Just gonna take my Ichimoku cloud off of me like that. All right. So let's see. Know a lot of you will have questions about. Okay, we got our entry. So what's our exit? Our exit is when the candle closes above this red line, conversion line. Okay. So as you can see, this candle, it closes above this red line. That's our exit. All right, closing above that line means it's going to be a pullback or it's going to be a complete trend reversal back to the upside. All right, so if you want to see how much you would get exiting right there, so our entry point was here, right? And we took it down and we exit on the close of this candle. Still 2,000 pips, okay? So you might have missed these, 600, 700 pips right here, but doesn't matter. You gained 2,000 pips on a standard lot. That's $20,000. So I'm not complaining. All right, so practice it, put it in your demo. Remember these key points, watch this over again, and let me know how you guys like it. Leave a comment or email me.